Good morning, it's Harvey Jackson. Just going to go through some quick news items. Just have a look at whether South America is driving this market or not. And yeah, we'll just get into it. So palm oil closes higher with other veg oils. I think that's no surprise right now. They are now maybe a little bit of a follower, not a leader in this market. So we'll that's good news, I guess, but that means that maybe canola can actually take some leadership, but it doesn't seem to be doing that as of yet. The all the air in the room is definitely taken up by rhetoric around Trump for sure and trade and everything. So India is looking at potentially buying more oil from other countries other than Russia. I kind of will put maybe a caution on this. They're part of the BRICS, so as long as they are participating in that, and I believe that they will probably still kind of follow suit of the BRICS trading group. Here we have a look at the cold weather that we've kind of see and kind of setting into the west and not quite into Manitoba, but definitely in Alberta. It looks like it's going to be extreme cold uh, for now and into February for the next week or so. Uh, Looking at this map, you can see that there's been dryness in that area, and that's a percent of rainfall for the last 30 days. So we know that it's been deficient, but then when you start looking at this, it still looks somewhat deficient, but it's actually caught some rain. And then when you look at exactly where the rain has fallen in the last active radar, it's more in central Argentina than in the growing areas or whatever the areas of concern. And yet the areas of concern is not the biggest growing area. Where that rain is hitting is actually probably a lot more significant. So when you look at the 7-day precipitation anomalies, it's still deficient in that area, and looking to get some dryness kind of built into Monograsco, where they can proceed in harvest, and that kind of leads to this slide here that Karen Brown put up, and this is actually talking about planting pace following the harvest, and it's at record slow pace back in, when you look at it. She does mention that the only 4% harvested versus 22%, because when you're planting your second crop, you're going to have issues. But and you can see it here as well. But this is a slide that I got from the CONAB back in October, and you can see that the planting pace was actually delayed as well. So and if we look at it, we actually ended up going somewhere like this and then getting back to normal, but it took us into the later months before it actually got to normal. So it's just a FYI. Mitch Miller put out an article talking about the positions, and you can see where we are right now, and you could say that they're almost identical back to 2020. And he mentions that in this article, but the cautions that he puts out there, and just understanding these positions, they could be maybe reaching closer to the top. Being prudent in making sales here would be probably the right thing to do, especially in this corn complex, right? So good read. Maybe have a look for that article on DTN. Canola, you can see that we're basically bumping up against that 200-day moving average. Looks like we got a little bit of support from our short-term moving average as well. Still supported in this uptrend, trading above the 38.2 retracement value. And what this is a look at is just the spreads between the front month and November, and it's now slightly positive. We would like to see it, get into a stronger positive, and that would actually help us with, you know, the spread or the planting to encourage more planting. Does that make sense? Now, November canola is actually, you can see that this curve looks different than the front March curve. It doesn't have as many pauses or even pullbacks, which is a good sign for the new crop. Still looking at getting a few sales made at 640 as per recommendation. Rapeseed, you see we pulled off of some of those highs, but still trading at $140 deficit to European rapeseed. Canola is trading at $140 deficit to European rapeseed. So here's your May rapeseed. It broke through that support line. Now, how important is that support line? It would be nice to see it actually continue to trade above it, but we are trading at the 50% retracement value, just taking in account this kind of area on the chart. Looking for some support from rapeseed to help canola here. If we look at soybean oil, you could probably call this a small pendant, and we're looking to hopefully break out that way. But pendants don't give us a greatest direction, but they are above the moving averages, long-term moving averages. So that's a pretty good sign there. Trading rate at the 61.8 retracement value as well. Palm oil, it's basically in the middle of the range here, and looking for some direction. It looks like it's basically it's starting to trade a little bit more sideways here. Soybean, this is the one that's been helping us, but you can see that you're basically trending down in the last week or so. Did have some good positive candlesticks in here, long candles, so that shows that there's quite a bit of volatility in this market as well. Fruit, West Tex Intermediate, downward slide, 50% retracement on the wave. Now we'll see if that actually gives us a bounce. I am of the camp that I would like to see it in below 70 if we can get there. Here's the Canadian dollar, and what I've done here is just look at, this is your Trump day where it actually traded its highs to its lows, just based on the threats of tariffs. So if we get threats of tariffs, I think we can trade well below there come February 1st. Now, there's a lot of rhetoric around what tariffs and how much, and is it going to be on everything? And are they waiting for more confirmations in the Senate to be able to have the right team in there to actually talk about tariffs? I think that's definitely a thing to think about as well. You can see the Canadian dollar in a longer term perspective. Wheat, zooming in. So if we're just looking at the short-term move here, we're trading right at the 23.6 retracement value. So and below some of the moving averages, looking for some support there. The differential or spread between the front month and December, it's actually in a negative. So it's 40 cents carry in the market. So it's actually telling us that we should be locking in when we're that kind of carry. And in the canola, we're not in a carry. We wanted to get to a carry market. We were very close to it, and then we pulled back. Back to the wheat here, just looking at hard red winter, we're actually at that 23.6 again in that range. So same with Chicago wheat, milling wheat, chopping sideways for quite some time here, looking for some direction. Corn is looking a little bit toppy here. Now, are we going to break out? I think $5 is probably the max that we can see. I'm still liking the idea of actually putting positions on to protect this downside, and we could use corn as a hedge against some of the other cereals if we want. And that's all I have for you today.